Mortgage holders are living on borrowed time. The Reserve Bank says any decision on interest rates is finely balanced, and this month's surprising decision to keep them on hold could easily have gone the other way. Analysts now expect interest rates to go up before the new year. Here's finance correspondent Philip Lasker.
RBA unchanged.
The experts got it wrong this month when they expected interest rates to rise, but today's Reserve Bank board minutes explaining that surprise decision hasn't dampened expectations.
It's not a question of if interest rates in Australia go higher, it's a question of when.
The board minutes said a case could be made to increase the cash rate, but that the arguments for or against an increase were finely balanced. The board decided it could wait because on the domestic front, households were not borrowing as much and the Australian dollar was helping squeeze the economy. But there was another major reason for caution.
Concerns about the US economy and whether that's going to provide some more downside risks to their growth outlook.
But the RBA also warned it couldn't wait indefinitely to see if the risks materialised. It all points to a focus on the domestic economy and the importance of next week's inflation numbers. A weaker number might buy a bit more grace for mortgage holders.
That would give the bank a lot more room on the interest rate front.
But the alternative could be a Melbourne Cup Day rate rise with an extra sting.
If the Reserve Bank does raise the cash rate in November, or if not then in December, then we will see the major banks move by a greater amount, probably by an extra 0.1% or 0.15% over and above what the Reserve Bank does.
It's hard to believe RBA officials will continue talking the tough interest rate talk without walking the walk. Philip Lasker, ABC News.